How's it going, everyone? This is Nick from Reventure Consulting. I'm super excited to be back here with you guys. I'm bringing you real estate data and demographic data from across the country. So if you're a home buyer or real estate investor in early 2021, you can make better decisions on your investment. So I'm really excited about today's episode because we're going to do a deep data dive on Las Vegas's real estate market. And Las Vegas is super fascinating because it has such a turbulent history. I mean, literally Vegas, if you look up boom or bust, the definition of boom or bust in the dictionary, you're going to see Las Vegas there. There are times when real estate does really, really well in Las Vegas, and there's times when real estate does really, really poorly in Las Vegas. So, home buyers and real estate investors, if you're looking in Vegas right now, you need to understand the data on Vegas's history and what's going on in the market right now. Before you make your decision, because you want to make sure that you don't get burned. A lot of people in 05, 06, they bought into Vegas at the peak of the bubble and they lost their shirt. They lost everything. Lots and lots of foreclosures, huge declines in values. No one wants that. So I think the central question on everyone's mind today is, number one, is Vegas a safe place to invest in real estate in 2021? Has its economy matured past its boom or bust days of 15 years ago, or is it still a risky investment? That's the first thing people want to know. The second thing people want to know is what areas within Vegas are the best to look at for home buying and investment and appreciation going into the future. What neighborhoods, what zip codes within Vegas are likely to see the most growth? And in this video, we're going to tackle both of those questions. So if you're a home buyer or real estate investor who's looking into Vegas, this video is a must watch. We're going to have key data on the state of the Las Vegas real estate market that's going to help you make your decision. All right, without further ado, let's get into it. So when talking about Las Vegas, the first thing we need to do is understand Las Vegas's history in terms of its real estate market. Because as I said in the intro, Vegas has a very boom or bust history. There's periods when real estate investors in Vegas do very, very well. There's periods basically when appreciation is high, rent growth is high, everything is great. And then there's periods where everything is really bad, when values go down, foreclosures happen, and lots of people lose a lot of money. So Vegas is a risky real estate market historically, and it's important for people to understand that. If you're a home buyer or investor buying into Vegas right now, it's important to understand that past, right? Because that doesn't necessarily mean that in the future Vegas is going to have a big collapse, but it means that Vegas is more likely than other markets to have some volatility. And you need to be prepared for that if you're buying into Vegas, right? You need to have the stomach to weather the storm if the storm comes. So I think it's great to establish some historical context. And you can see that on this graph. So the blue line is the typical home price in Las Vegas over the last 20 years. You can see it kind of moves up and down. And the gray line is the US average. So let's start today. In February 2021, Las Vegas's typical home price, that's the price of just imagine like the average home in the market right in the middle, $320,000. In February 2021 in Vegas, $320,000. And you could see that that's about 15% higher than the $270,000 US typical home price. So $270,000 is the typical price across the US, $320,000 is Vegas. So Vegas is above the US average. However, if we go back historically, we can see big, big differences along the way. So let's zoom all the way back to 2001, when the typical home price in Vegas was $180,000. You can then see over the next 5 years, that price shot all the way up to $341,000 in mid-06. And this was the peak of the housing bubble, the mid-2000s housing bubble across the country, but especially in Vegas. Mid-06, that was the peak. And you could see that investors and homeowners in Vegas almost doubled their money, right, in the span of 5 years. But that appreciation wasn't going to last long. And then over the next 5 to 6 years, values in Vegas absolutely cratered. And absolutely cratered all the way down to $130,000 in March 2012. So you got to stop right here and just let that sink in for a second. Prices in Vegas from 06 to 2012 went down by 63%. 63% decline in home prices from 06 to 2012. So a majority of people who owned real estate in Vegas at the time got absolutely crushed, right? And it's important to have this context. I don't necessarily think this type of decline will happen again, but it's important to know if you buy in a market like Vegas, you could lose value, right? And you just need to know that if you're getting into a market like Vegas. So I put a lot of work into these videos. I love sharing this content with you guys. So in return, I just ask, can you please hit the like button? If you hit the like button, that will help tell YouTube that it's a good video, and it'll show it to more people and get me more exposure. I would really appreciate it if you could do that. Also, please comment on the video. Let me know what you think, especially if you're local in Vegas. I love hearing local insights, so make sure to comment. And if you haven't subscribed, also make sure to do that. All right, back to the video. Of course, things bottomed out in 2012. And then they have appreciated a lot since. So prices have almost tripled now over the last 9 years, from 130,000 in 2012 to the 320,000 we see today. And so lots of volatility in Vegas is past, and you'll see that the 320 today is actually less than the 341 in 06, and I think that's a good thing. So prices in Vegas today at 320 are less than they were 15 years ago in the previous peak. And Vegas has obviously added lots of jobs and economic growth since then. So the value of 320 today seems a lot more sustainable than the value of 341 15 years ago. And one of the principal reasons for that is the relationship of supply and demand. So I talk about this a lot on this channel. Real estate is all about supply and demand. How many people are moving to a city, how many jobs there are, that's demand. And then how many new units and how many new apartments are getting built, that's supply. And what really happened in the mid-2000s is that Vegas was building way too much supply. So many new homes and apartments in Vegas were getting built. It was absolutely ridiculous. And they were never going to fill, realistically, they were never going to fill those apartments and homes with people. They were just building way too many. And that's one of the things that caused that crash in the late 2000s, early 2010s, was that all the overbuilding led to a lot of units just sitting vacant. And when units sit vacant, well, that's going to push prices down. The upshot is that today in 2021, Vegas is building a significantly fewer amount of new housing units. So supply now is much lower than it was back then. And that's kind of creating a bit of a housing shortage in the market where we're not necessarily building enough new homes and apartments to absorb the demand for migration and new jobs. And that's evidenced very clearly on this graph where we're looking at the amount of housing and apartment permits pulled per year by developers in Las Vegas. This is data that comes from the US Census Bureau. And wow, you can tell 03, 04, 05, 06, 30 to 40,000 new units permitted to be built over the next year or two in the mid-2000s per year. That's just so much new housing. Look at all that new housing in Vegas in the mid-2000s. And as I just said, that was a principal reason why home prices collapsed so much, was there was so much inventory and so much supply, and there was never even going to be close to that many people to live there, and that caused prices to go down. Now, an interesting thing happened after the housing collapse. You could see that new permitting went to almost nothing. It went from 30,000, 40,000 a year to 5,000 a year, new permits for homes and apartments. And it's kind of rebounded a little bit since then, but not really. You know, in 2020, 14,000 permits for new homes and apartments were pulled. That's still roughly 1/2 to 1/3 the amount of the mid-2000s. So there's a much better supply-demand dynamic in Vegas today. Vegas is not building nearly as many new homes and apartments, and that means it's unlikely that there's going to be the same type of crash in values if the housing market turns down. Now, there's a couple reasons for that decline in permitting and supply in Las Vegas. One is that a lot of regional home builders that existed in the mid to late 2000s went out of business after the financial crash, housing crash, and they never returned. So there's just less builders than there were 10 to 15 years ago. But another reason is actually kind of sneaky, and that's the geographic supply constraints that exist in Las Vegas. Las Vegas is in a desert basin. That means it's surrounded on all sides by hills and mountains. And that means that as the footprint of the city expands, which it's been doing, it's going to eventually hit these hills and mountains, and you're not going to be able to expand as much in the future in Vegas, and you're not going to be able to build as much. So there's some geographic supply constraints going on that are causing permitting and new construction to go down, which is a good thing for real estate values, right? If you're a homeowner or investor, less new supply, that's a good thing for real estate values, and Vegas's geographic supply constraints have something to do with that. Now, it's not all roses in the Las Vegas real estate market right now. So while there's less new supply, I'm actually really also concerned about the demand side of the equation, and that would be job growth. Vegas has been one of the highest growth markets in the US over the last 30 years. It's leading the way in job growth over the long run. But there's two concerning aspects to that. The first is that Vegas's job growth is declining over the long run. In the 90s and 2000s, Vegas was hitting annual job growth figures that it's not coming close to hitting anymore. So people banking on Vegas just continually pushing out 5% annual job growth, 6% annual job growth. That's just not really going to happen in the future anymore as the city matures. So its long-run growth is going down. The other concerning thing is that Vegas has gotten absolutely hammered by the COVID recession. Absolutely destroyed. Roughly 14% of all the jobs in the metro area are gone compared to a year ago. And that's not good for a local real estate market. If literally almost 1 out of 6 workers is unemployed, that's really bad for the local real estate market. If 1 out of 6 workers is unemployed, it's going to be hard for them to pay rent in the future. It's going to be hard for them to afford to buy a home in the future. Of course, the short-term impacts of that are being masked, right? There's an eviction moratorium. There's a foreclosure moratorium. There's heavy fiscal stimulus. But eventually, as the year goes on, the economic realities of Vegas's job losses are going to take hold. And you can see what I'm talking about on this graph, where we're looking at the annual change in jobs, the annual growth in jobs in Vegas year over year, going back 30 years, going back to 1990 all the way through 2021. And when you see this line being blue, that means that there's job growth in Vegas. When you see this line being red, that means there's job declines. And a couple things come clear on this graph. The first is like the long run from basically 1990 to 2007 that Vegas had in growth. I mean, it was achieving crazy numbers, 10% job growth a year in the mid 90s, 8% in the late 90s, going up to 8% in the mid 2000s. And the recessions weren't that bad. You can see here there was barely any dips below into negative job growth territory. So Vegas just had a bull run from 1990 to 2005. But then you could see, oh wow, we have a big crash in the late 2000s, 10% job losses in Vegas in the late 2000s, which was another reason why home prices declined. And then it bounced back, but it bounced back to a growth level of around 3.7%, 3%, which is good growth, but you could see that it's much lower than the growth figures it achieved in the 90s and 2000s. And that's part of an economy growing and maturing. You're not always going to hit those 8-10% per year job growth figures anymore. 3-4% still pretty good, but it's instructive of the fact that Vegas's growth, best growth years are behind it. Vegas will never grow like it did in the 90s and 2000s again, right? The growth will slow. Now, the other concerning thing here is what I mentioned before, minus 13.7% jobs losses in early 2021 compared to a year earlier. So Vegas has basically hemorrhaged jobs, 140,000 jobs lost over the last year due to the COVID recession. Now, look, a lot of that has to do with lockdowns due to coronavirus, people being scared to travel because of coronavirus. And it's reasonable to believe that in the coming months with vaccinations that and opening of economies, that this number is going to trend back up. But it's going to take, in my opinion, a very long time to erase these 13.7% job losses. Like, I think it's probably going to take years to get back to the job count Vegas had before COVID. And if it's going to take years for Vegas to simply get back to the level it was in early 2020, like say maybe 2023 before it gets back to the early 2020 job count, that's not good for the local real estate market. It imposes a lot of downside risk. And again, like I said, this is risk that's kind of being hidden right now by the eviction moratorium, foreclosure moratorium, fiscal stimulus. It's kind of pumping money into the Vegas economy and, hiding the realities from the real estate market of all these job losses. But eventually, those realities are going to hit. But of course, real estate is local, right? What's happening in the broader economy impacts every neighborhood, but different neighborhoods grow at different rates. And that's something we've definitely seen in Vegas over the last 5 years or so. Certain areas have appreciated extremely fast. Other areas haven't so much. Other areas have seen a lot of population growth. So it's important to understand these kind of micro neighborhood specific data points. So if you're a home buyer, real estate investor, you know what you're getting into at the micro level, right? You want to understand what's going on in your neighborhood specifically in terms of how much home prices are, how much appreciation is there, how much population growth and income growth is there. These are really important things to look at the micro level as well. So we're going to do that. We're going to start by looking at a map of all the zip codes in Las Vegas and trying to understand where are the most expensive pockets for real estate and where are the most affordable pockets for real estate. So here we're looking at pretty much every zip code in the Las Vegas metro area. And the greener the zip code looks, the higher the home prices. The bluer the zip code looks, the lower the home prices. And the first thing that pops out is that the highest prices in Vegas are kind of on the periphery, right? They're to the south here in Henderson, right? 89052, 89044 have typical home prices above 400,000. They're to the west in Summerlin, 89135, typical price of 490. 89138, typical price of 560. That's actually the most expensive zip code in Vegas. And then you also go north, 89131, typical price over 400,000. So it's really on the periphery to the south, west, and north where the highest priced homes in Vegas are. These are more of your well-established neighborhoods, your well-established communities and suburbs where people earn high incomes. The highest incomes are in this western area, also in Summerlin. You'll see typical median incomes above 100,000 in these areas. And so if you're looking to settle down in Vegas and you have some money and you want to be in a nice, expensive neighborhood, those would be the neighborhoods to target. Now, as we go further in to the center of Vegas, we can see that that's where the affordability is, and really a couple key areas. The first is you can see North Las Vegas, 89030, typical price of 216. 89101, typical price of 226. These are kind of the more urban, denser zip codes that offer more affordability. Additionally, if you go south, 89119, this is where close to where UNLV is, typical price of 210. 89103, typical price of 200,000. So it really depends on kind of what you're looking for. Are you looking more for affordability with potential higher growth? Or are you looking more for something that's established? If you're looking for something that's established, look at these green zip codes. If you're looking for something with affordability where there might be a higher growth potential, look in the blue shaded zip codes. Now that relationship between price and growth is an important one, and it's something we see in all the markets we look at. This is the 15th market deep dive we've done here with Reventure, and if you look at other markets like Salt Lake and Denver and Houston and San Antonio, it's almost always the same trend in every market. The higher priced the neighborhood, the more expensive the neighborhood, the less it grows in terms of appreciation, right? The lower priced the neighborhood, the more affordable, the more it tends to grow. And this is a relationship that we see kind of across markets, right? It's pretty consistent. If you want higher growth potential, you have to go to those more affordable areas. Now we're looking at price appreciation over the last 5 years. So the bluer shaded the sell, the higher the price appreciation. The more red shaded the sell, the lower the price appreciation. And so you can immediately see what I'm talking about. These more high price zips here on the fringe, these have the lowest appreciation rates. Now, plus 35%, plus 32% over 5 years, that's still pretty good, but it's not quite at the levels of what we're seeing in these more affordable zip codes in North Las Vegas, the center of Vegas, where we're seeing 94% appreciation in the last 5 years, 77% appreciation in the last 5 years, 65, 68, 68. So most of the appreciation in Vegas has come kind of in its urban core and its affordable zip codes over the last 5 years. Now, like I said, those zip codes could also have a lot of downside, especially the ones in North Vegas. They have very high poverty rates. And I think a lot of that appreciation being driven in those zip codes is investors coming in, buying homes, renovating them, flipping them. And that could help drive the market for a little bit, but that could also make the market riskier in terms of a downturn. Most real estate investors I talk to don't necessarily want either extreme. They don't necessarily want the most expensive secure market, nor do they want the highest growth, riskiest market. They want something in between. So what you can do there is try to find the neighborhoods that have the best balance between growth and security. And so what I help clients do, if you're looking to buy a home or a real estate investment property in Vegas and you care about appreciation, I walk clients through the data, zip code by zip code, on things like income levels, college degree rates, poverty rates, and combine that and compare that to affordability and appreciation. And we can find the zip codes in the areas that straddle line and have the best balance of future growth and security into the future. So if you're interested in that and learning more, I provide one-on-one coaching services where I help home buyers and investors do just that. So go to my website, www.reventureconsulting.com. That's www.reventureconsulting.com. Submit a contact form with a brief description about what you're doing in real estate, and I will get back to you. So that's it for today. Until next time, this is Nick from Reventure Consulting signing off.